everyone will usually tell you you only need one pair, you only need one session, and you only need one trade a day to make money. Now that can be correct. Most people don't actually know what kind of trades to take within a session. Let's get straight into it. If you want to trade London, which will be the topic of this video, you need to have it marked out with the kill zone starting from 2 a.m. finishing at 5 a.m. EST. If you want to set the time zone to EST, you simply go down here on TradingView and then select UTC-4, which is the New York time zone. Once you do that, you can then use an indicator like this called market sessions, made by Levithian. And once you have a visual like this, you need to consider the following. A trading strategy for London almost every time would require some sort of manipulation before you actually trade your setup. What this means is you need manipulation to occur before you actually trade a certain direction that you've got a bias of. My bias for EURUSD was bearish today. Primarily it was because the high of the previous daily candle here got taken out. Once that high gets taken out, we then assume, with the knowledge that we have been provided by ICT and also the knowledge from my videos, that there is enough liquidity on that liquidity pool, the swing point. We then, on the current price action here, expect a reversal. If you want to trade London, this is how you would do it. I personally wait for something like that to happen, so previous day high to get taken out. Considering you've got a draw on liquidity below price, you then mark out the opening price on the New York time frame of the day, which is 12 midnight, and that would be the opening of this candle right here. You put a line across that price, and you then expect price to push the opposite direction of which you are trying to trade. Now, the reason why that is the case is because if you are bearish, what you're basically betting on is there being enough liquidity for sellers to liquidate their positions and push price lower. Now, how do you get that liquidity? Well, first of all, we've had the previous day high taken out. Second of all, we have had price manipulate above the opening midnight price. And then once that happens, I can break down a lot of things, but the only way you'll be able to master it is by backtesting it yourself. Once the manipulation takes place, whether it's inside of an array or some sort of other technical pattern that you will use, once price manipulates on the opening midnight price and goes above it, so this line right here, you then wait for a market structure shift like this. You need it to be energetic. So once price breaks a low like that, you want to consider the manipulation having taken a high out. So like this one here, which is very significant. And once it does that, you want to then consider price having taken a low out, which is this one here. What this constitutes or entails is a potential market structure shift. Once you have a market structure shift, which happens after a low is taken out, you then expect a retracement into the fair value gap previously created before this market structure shift, which in this case is this one right here. And your stop loss can be within this range. It depends on your data and your own backtesting. It can be at the top of this gap, the bottom of this order block, the top of it, or the high. I personally would do something like 5.5 pips minimum stop loss inside of this order block. And then what do you target? That's a very good question. What do you target with this strategy? What you're targeting is minimum 50% of the daily range. Now within the day here, we don't have a clear range, but if you check on the left, we've got a very clear swing low. And if you check on the right of it, we have a very clear swing high. This is clearly the daily range. Some people may disagree. Some people may have a different gauge of it. But regardless, if you have an overall direction, that's enough to take profits. So in this case, the 50% range would start here, and this setup wouldn't have been the best, but this happens. Sometimes the 50% range ends up being a 1 to 2, 1 to 3, 1 to 5, whatever you want to target, you should be aiming for at least the 50% range. If you want to be targeting for lower, as you can tell, the move sustained itself up to a 1 to 3 almost, actually even lower, almost a 1 to 4. But what I'm trying to tell you is that the minimum should be the 50% range equilibrium point right here. And as you can tell, when price does reach there, we get a pullback or retracement to then have this gap, which was the entry, be respected, and then market just melts down. This sort of strategy is very simple, but it's effective and it works out very well if you can time 1, the manipulation, 2, use the time factor. We've just had some news, holy crap. And 3, have your bias and narrative ready. You need drawn liquidity, bias, narrative, and entry. And if you're able to get all of those, you can simply apply a model like this, and that's it. The model is not hard. The strategy, the entry, the setup is not the hard part. The difficult part is being able to draw your liquidity out is being able to have a bias and being able to form a narrative around reaching that liquidity. Once you're able to do that, you can use a model like this and trade it. If the model does not show the steps that I've broken down, don't trade it. So just to recap, my bias was bearish for EURUSD due to a previous day high being taken out, which was in this case here. We're not trying to predict the close of the candle. We are trying to trade the overall direction, which in this case, it did expand a little bit down. It didn't sustain, but still the bias was correct. So the previous day high got taken out here. The move started all the way from the top there. And because it was Friday, it started to continue on Monday today. On the 5-minute, we marked out the opening price right there. We've had London manipulate above, collect a high, which is a liquidity. And this is the manipulation that we are looking for when we are bearish, which is a bullish manipulation. Once that happens, we've taken our high. We now want to take out the most significant low, which in this case is this one. We do that with a gap being left behind, which is crucial. If there is no gap, then you don't trade it unless you want to go down to the lower time frames. You can do that. On the 5-minute, there is a gap. We have a retracement. We target minimum 50%, stop loss within this range, and that's it. And that's it. And you just repeat. That is the most simplest London strategy you can get. This strategy it's also based on the 2022 ICT model with my own little twist to it. You can apply it on New York, but it works most efficiently in London. I would highly advise you keep it this simple. Don't overcomplicate it. You don't need indicators. Some people do this without any fundamental research at all. And all you've got to do is repeat, collect data, back test it, and keep practicing it. So yeah, let me know how that goes for you. Share your thoughts in the comments. If you have any questions, I'll reply. Take care.